Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, May 20th, 2022. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. Stocks made a lower low following a feeble bounce into May 17th. We'll look at all of the major indices and how they're performing. I'll give an example of a potential short trade and how I would set it up for Ross stores. Market breadth is again pointing to more downside. I'll show you where the target is for the downside. High yield bonds also hit a new low, so that's not a good sign for stocks because of the correlations. Dollar did pull away from recent highs, but gold is still it's not looking really good right now. And we'll look at Bitcoin to wrap it up as it tests 2021 support, and I think it could easily collapse to about 10,000. If you're a subscriber, then stay tuned. We're going to cover all of these stocks, these various speculative stocks especially. We're already looking at short setups. Alright, so let's look at S&P 500. This is a daily chart of S&P 500. So daily means each of the candlesticks. This is a candlestick. This red and green sticks, they're called candlesticks. So this is 1 day's worth of activity. So notice it says daily, 1 day. So for example, what happened today? We can look at it from a point of view of what happened today. So we saw a big spike to the downside. We saw a spike to the upside, and then the price kind of settled in the middle. So we can actually look at what happened on the 5-minute chart. And here is the opening. Now, the S&P 500, you can see it 20th of it's opening right there at midnight. So the price actually opened like right there, and then it spiked up, spiked down a lot during the day, and then finally had a big rally into the close. So this is on the intraday chart, on the 5-minute chart, and you can actually trade it as well using my indicators by, for example, so there is the where I'm hovering right now at 7:05 in the morning. This is California time, by the way, Los Angeles. You could have sold it short, so I would have sold it short right there with a stop above the blue line. So that's how you can trade intraday on 5-minute chart, and you would have been super correct if you exited partially here around the yellow line, and then definitely exit here around the red line. So it's right now already after the close, and it would not make sense to start opening a new position because literally we're gonna end the session in a few minutes. But going back to daily charts, daily time frame, we can look at S&P 500 as it is making lower lows. So notice today S&P 500 made a lower low. So the definition of a downtrend is a security making lower lows and lower highs. So far the high that it made is actually quite feeble. So there's the high on 17th of May. So we made a lower low here on 12th of May, rallied into 17th, possibly even 18th of May. We made a slightly higher high, but that same day we completely unraveled on 18th of May and then continued down into the end of the week. So right this instant it looks like there's a good chance that we have bottomed. This looks like a hammer candlestick, and it looks there's 3 of them. There's one from 12th of May, there's one from 19th of May, and then there's one from today. Potentially we have bottomed, at least in the near term. So it would make perfect sense for the rally to continue, and I think it would make sense for a rally to continue towards this red support resistance level. So it is currently at 41.82. which is about 7% away. That's a very reasonable scenario. So far we have failed to get to the red line because here's the beginning of a bear market. So how do I define a bear market? I define a bear market by looking at my indicators, which you can see on this chart, this green, blue, red, and yellow line. So these indicators measure and signify levels where certain decisions can be made. For example, when we close below the yellow line, and this is a stock, S&P 500, stock futures, this is where I say, okay, we're now in a bear market. In other words, we're in a downtrend. And I'm thinking about, okay, we need to wait for the bounce and then sell it short. Now, we're still waiting for this bounce. We got as far as almost we got to this red support resistance line right there on the 4th of May, but we didn't even actually get there, and we collapsed to new lows, and then we again made a slightly higher high and then made a new low. So I think it does make sense for a substantial rally around 7% to materialize in the next few days, 2 weeks. So we're looking at early to middle June, I think, where we can potentially think about selling short after a rally. I would not want to be selling short right this instant. Why do you think that is? The reason being is because at this point I need to put my stop somewhere, and my stop is a trend change. So a trend change would be a change to the bull market. And where would be a bull market? Bull market would be at the blue line. So currently it is at 44.33. Okay, so that is a really pretty big stop. That's 13% stop. So if I was to short it right this instant on the 20th of May, I would need to put my stop way up there. Now, if I wait for this security to come up to the red support resistance line, because I know that that's much less risky entry. So we can look how much stop I would save if it skyrockets right this instant. So let's say it pops towards the red line, does something, and then closes again below it. You see what I just did? I just said I don't know the future, but I know what behavior to expect, to look for in order for me to open a short position. I need to see a move towards the red line, which is at 41.82. It will do something, like let's say it closes above it and then maybe trades a little bit, and then finally it closes below it again, below this red support resistance line. So that would be a signal for me to open a short position. And let's say at that point I would need to put a stop somewhere. So I would need to put a stop above the blue line, which is my trend change. Because if a security closes above the blue support resistance line, that means we're in a bull market now. So do you see how much the difference is? I would only have a 5% stop, 5.5% stop, versus if I was to short it now, I would have 14% stop. You see the difference? So at this point, I want to do nothing unless you already are short. Let's say you miraculously shorted it right there on the 5th of May at like 42.90. Then I would consider taking profits on this short position. But I wouldn't want to be opening a new short position at this point. I want to wait and see where we're going to bounce to. Did that make any sense? Please make a comment or send me a direct message. You can send me direct messages right there where I'm hovering. It says private chats. MasterCharts is my handle. You can, MasterCharts is my handle. @MasterCharts is my handle on TradingView. But you can also send me a message by going to MasterChartsTrading.com and then click on help and click contact. So that is another way to get a hold of me. Looking at Dow Jones. So Dow Jones also entered the bear market here on 29th of April, and actually if you were extremely nimble, you could have gotten in like right by the red line, but honestly it's questionable if you were able to get in. But let's say you were able to get in just around 3380 or so, 33,800. then you would make nice money at this point. I would potentially start taking profits at this point if you had a short position, because counter trend rally is most likely coming, and again it will be coming towards the red support resistance line, which is currently at 32,928. At that point we will see if it makes sense to open a short position. But because of the correlations between the major indices, S&P 500, Dow Jones, NASDAQ, and small caps, they're all in a downtrend, so there is nowhere to hide really. Here's NASDAQ. Once again it is making new lows, so today it made a new low. Bear market for NASDAQ began slightly earlier, right there in March of 2022. Again, this is according to my system. It's not necessarily following, the 20% rule from the top. It's just showing you where the support resistance lines are, and so you can actually have the same lines on your chart and make your own decisions. But looking at this one, let's say you were following my ideas, and here on the 8th of March you said, okay, we are now in a downtrend, we want to wait for a bounce and get short. So notice what happened right there on the 18th of March. We had a breakout above this red support resistance line, and we did not get a signal. There was no signal here. The signal would be a pop above the red line and then a close below it. So we would have just sitting there doing nothing, and notice that it continued higher into late March. Only on 8th of April we finally got our signal. See, that is a signal right there where I'm hovering. It's a close below this red support resistance line. It was a killer signal because notice what happened afterwards. We collapsed from 14,300 into 11,500. That is a very nice 18% drop in your favor. So you would have made nice money right there. Right this instant, again, I'm seeing a potential for a bounce. So we're going to be looking for a potential bounce towards red line, which is the 13,469 currently. And Russell 2000 small caps index entered bear market even earlier. It entered bear market right there where I'm hovering, January 18th, 2022. We had 3 opportunities to sell it short. It's pretty clear, right? I'm not making this up. I'm just looking at the chart. So what do we need to do? We need to see either a high above the red support resistance line, for which you can find out more about in the description about these lines, or a close above it. So you see we just had a close above right there on 29th of March. But we need to see a follow up sometime later, after the high, after the close above the red line. We need to see a close below the red line, and so we're right there. On the 30th of March we had a signal, and then another nice signal right there on the 5th of April. Why? Because we had the high above the red line and a close below it. Okay, so you would have been very correct if you opened a short position, and you would have been 17% correct. Alright, looking at a potential short opportunities, I wanted to show you how to identify good opportunities and how to trade them. Okay, this is Ross Stores. So this is the final outcome. You can see that today the stock collapsed over 20%, and we would have been short this particular stock on where I'm hovering on 26th of April. Now, how did I arrive to that conclusion? So let's go back a little bit and first figure out how to even read the charts. So the last signal before the latest one was right there where I'm hovering, 27th of September 2021. This would have been a bullish signal. In other words, you would be buying here. You possibly may have been stopped out at profit, because notice right there, yeah, I know it dropped initially, but remember that our initial stop would have been at the yellow line. So let's say we bought it right there, 27th of April, September. We would have put our stop way down here where I'm hovering at the yellow line. because we don't really know how the stock will behave. And see, it actually dropped initially. So if we put a very tight stop, it would have been stopped out. And I want to make sure that we don't get stopped out and we wait for our target. So the target actually may have been reached right there on the 17th of November, and the same day you would have been stopped out. So you would have, got your target, moved your stop to entry. This is important maneuver. So once you get your target, move your stop to entry from way down below here. And you probably would have been stopped out the same day, or maybe next day, on the 18th of November. So let's say you were indeed stopped out, but some people were not, and so I send out this caution alert. Caution means get ready to exit. And next few days, 30th of November, you would have been out. 30th of November, avoid, meaning exit, run away. So you had several opportunities. For example, one right there where I'm hovering on 31st of December. You would have been able to get in on the short side. Why? Because we are now in a bear market. 30th of November, we have confirmed that this security is now in a bear market. Now we need to think about how to sell it short at what price level. We waited until the price came up to this red support resistance line on 3rd of January, and we opened the short. We would have been very correct here, and we would have been, I would have been probably out right there where I'm hovering on 13th of April, and I would have probably just done nothing at this point. However, a few days later, on 26th of April, we got our signal again to sell short. Why? So there's the signal, because the price came up above the red support resistance line and then closed below it, right there. If the price continued higher towards the blue line, I would have said, okay, we're no longer in a downtrend. We may now be in an uptrend, and I'm actually potentially would have bought it here, but we didn't. So our stop is our trend change, and because it didn't occur, our stop wasn't hit. So we sold it. We would have been selling it short right there, 26th of April. And I usually say the best thing to do is to buy put options about 1 year out. So the reason for 1 year out is because I don't exactly know what's going to happen after the immediate entry. And so sometimes it takes a while for the stock to do what you want it to do. Now, if you if you buy, let's say, a month or 2 months out, you may not be, you may still get stopped out. Your puts might still expire out the money, in other words, even though you might be correct because the price dropped. So best thing to do is to buy at least a year out. And so you need to look for stocks which are liquid enough that have a year out or maybe even more options. And then from here on we just do nothing. We bought right there, 26th of April, we bought puts, and we waited until about 9th of May. So it's just a few days where we got our target, 9th or 10th of May. So the stock dropped in our favor. At that point, that's already 11% move. But because we have options, we bought put options, we can easily triple that move. So at this point, somewhere around May 10th, we're already plus 33% or so. Now notice that today the stock collapsed over 20%. So our total win would have been somewhere in the vicinity of 100%. So let's say we bought puts out 1 year, so expiring in 1 year from today. The drop from our entry is 32%. And once again, when you buy options, usually about a year out, they move 3 times as much as the stock. So we're looking at a 100% move from April 26th until 20th of May. That's about a month out, so 100%. I think it's pretty good, and see how easy it is. I knew nothing about this earnings things, and see, notice that they missed the earnings by 3 cents, yet their stock dropped 20%. So how do you reconcile that? I don't. I have no idea. I'm only looking at what price level to buy or sell stock. So at this point, it's pretty obvious we would be selling short right there, 26th of April. Moving on to market breadth. So very briefly, I want to try to cover market breadth. So we're looking at New York Stock Exchange advanced decline volume line. So you can look up how it's calculated. Go to StockCharts.com, click on Chart School. This is on StockCharts.com, and then type in advanced decline, and then there is a explanation of how it is calculated. Here, what I wanted to show is, so in the upper part here is what's called advanced decline volume cumulative line. So I don't have time to explain it right now, but just bear with me. So notice that today we made a lower low relative to the S&P 500. So notice that we have not yet reached the target of where the lower low for market breadth is. And market breadth low corresponds to November 2020. So we're looking at 3,400. This is an updated target because I thought it was going to be 3,600. So it looks like we might actually continue lower. That's another 11% or so according to advanced decline line. Looking at various other securities, so junk debt, JNK. This is a weekly chart, so each candlestick is 1 week's worth of activity. We are back for junk debt back to April 2020, so this entire thing from the pandemic low is basically getting unraveled. Now, last week I thought we reached the bottom, because from week of May 2nd to the week of May 9th we had a gap here, and I thought this was an exhaustion gap. I guess not, because we continued lower. Usually, so looking at this is a correlation coefficient once again. So correlation between junk debt and S&P 500 is very high. Notice this correlation coefficient spends most of its time in the positive territory. So I'm going to say that in this case, junk debt is leading the stock market lower. Switching gears, let's look at dollar currency index. This is DXY. So bull market in dollar index started right there on July 13th, 2021. You had several opportunities to buy this security. You could also sell short euro versus US dollar. That's if you have Forex account. But I mean, if you are not in the United States, then you can actually trade this particular security, DXY. So right this instant, it looks like we are potentially topping, but after an enormous 13% move, and for currencies it's a huge move. So potentially we're topping here from mid-May into 19th, 20th of May today. But uptrend still remains, so a good pullback would be towards 99 level. It may or may not happen. Looking at gold, because gold is traded in US dollars, so XAU divided by USD, if the bottom part of this equation becomes stronger, it is pulling this currency pair lower. Now, until relatively recently, this wasn't an issue. Dollar was going up and so was gold. Here's the top into March, but then it became an issue and actually started to weigh on gold. So first we broke support right there on 25th of April, and then we broke another critical support right there on 12th of May. In fact, we broke this red support resistance line, and now I think gold is in a bear market. So what we're seeing right now is a bounce. And notice that I actually haven't yet sent alerts to sell short, even though right there where I'm hovering on 17th of May, this was a signal to sell short. I just want to see how far we're gonna get this bounce. So maybe gold is faking out. There's sometimes this happens, and let's see how high this bounce will be. If we get to the blue line, even maybe we'll even go above the blue line. In that case, this bearish signal is negated. So we'll see where it gets us. And looking at Bitcoin, so Bitcoin, I am bearish currently. Notice the downward facing arrows 4 times. Very successful trades. Latest one was extremely successful. So we went from 45, almost 46,000 to 25,000. So we made 45% in this short trade. This is huge. Now, if we can look at the weekly chart for Bitcoin, so Bitcoin has broken support from where I'm hovering right now, from this 24th of January levels, right there where I'm hovering. It broken those support last week. So right this instant, we're testing the support from right there, from 21st of June 2021. We're literally testing it as we speak. But because Bitcoin is traded 24 hours, 7 days a week, there's still 2 days left in the trading. So we'll see what happens on Sunday, basically. But if we break down here, we can easily collapse to like 10,000 or even lower. Alright, that's it for this week's recap. Head over to MasterChartsTrading.com and click on sign up. I have 4 different price levels for the membership. So first, of course, is the trading indicators, and these are these lines in this chart. So again, you can simplify your life by simply having these lines in your chart, and you only need free TradingView.com account, and I will open the door for you on TradingView once you sign up on my site, Master Charts Trading. If you want the newsletter, so the newsletter is we're going to cover various stocks, and we get daily email alerts and weekly members only video. I think the best deal, of course, is to get both trading indicators and newsletters at only $59.95. I think it's a great deal. $59.95 per month. I think it's a great deal. You get both of the newsletters and the indicators as well. And of course, the if you need more individual training, you can get VIP access, and you get 60 minutes of one-on-one screen sharing time via Zoom at $259 per month. So consider signing up for that. That's it for this week's recap. Again, if you have any questions, please let me know. Thank you for watching, and have another great trading week. Bye-bye.